We're here talking about ownership-minded management teams and what that means, and global champions. We talk a lot about global champions here at YCG, and we're going to get really stuck into that and help you understand what that means. Welcome to YCG, where we help make your capital grow. My name's Will Kruger. I'm the CEO here at YCG, and today we're talking to Elliott Savage. He's the principal and portfolio manager here at YCG. Elliott, great seeing you.
Great to see you.
All right, let's, and before we go on, make sure you subscribe and hit that bell notification so you don't miss a thing. Let's get stuck into the topic here. So we talk about global champions and how important that is in investing in those types of businesses. One element, I think, when we look at global champions and a business that kind of fits that criteria, is that these companies tend to have a long-term and ownership mindset with the businesses that we own. Let's dive into a little bit more deeper. What do we mean by ownership-minded management teams, Elliott?
Yeah, so I would say that one of the things that Charlie Munger always says is just how important incentives are, and how the older he gets, the more he feels that's true, and that even though he thought they were really important when he was younger, like they're even more important than that. And we would say that we totally agree. So what we're looking for is, unfortunately, the average CEO only has a tenure of about 4 years for the Fortune 500 companies. And what that means is that these people aren't necessarily bad people, but they can't help but to consciously and subconsciously think about their tenure as over that 4 years. And so when they get their options struck, their stock options struck when they first get there, their incentives are all to maximize the value over that next 4 years. And unfortunately, this kind of renter mentality leads to a lot of times decisions that may maximize earnings and stock price over the next couple years, but they actually hurt the long-term competitive advantages of the companies. And so we're looking for businesses where, either through family ownership or a founder or a CEO who owns a big stake, we're looking for situations where the management team is incentivized to both consciously and subconsciously think about growing the long-term competitive advantage for decades, even generations.
I love that. So we're talking, another description would be kind of the principal agent problem. And I would also say that here at YCG, Brian, myself, Elliott, the three owners of YCG, we have 100% of our net worth in this strategy. We believe in it. And I think that's exactly what Elliott's talking about here, and it's essential. Give me an example in the portfolio where you have an ownership-minded mentality or family-owned business that you could cite as an example.
Yeah, so I would say the luxury goods companies are great examples. So you've got, LVMH. We own LVMH and Ferrari and Hermes and also Richemont. And actually, all of them have big ownership stakes of kind of strategic family owners. And I would highlight, Hermes as one that really sticks out to me. You've had generations and generations of family who've owned this business, and they really, culturally have taken it to heart that they're managing this business for generation 2, 3, 4, 5 in the future. And you can see that with the fact that they have big net cash stake and no debt. And then you can see that with the way that they really have this strategy of not worrying about short-term earnings, but instead, just making sure that their products are incredibly desirable and that demand is higher than supply for their iconic products like the Birkin bag and the Kelly bag, things like that.
I love that. With CNBC and kind of the media, they're selling kind of what's happening now. How can I make money in the next day or next week? And really, when you're investing in stocks, I think people need to realize you're buying a stock and that the future cash flows of that business going out 20, 30 years. And that's a challenge too, because I think businesses, on average, don't even exist for that long. So you've got to identify businesses that have this long runway for growth, but also have a management team that are making decisions that will benefit themselves and the company in the long run and grow their earnings over the 10, 20, 30-year time frame. And there are far too many people and investors, I think, right now in the marketplace that are just looking to make a quick buck over a very short term. So I love this concept of identifying ownership-minded management teams, and that doesn't mean that we're only looking for family-owned businesses, but it sure does help, wouldn't you say?
Yeah, totally agree. And I would say that in general, we as humans tend to have, we tend to be, avaricious and impatient and overconfident. And so that leads us to really have this very strong desire to get rich quick. And then the overconfidence to think that we can take these big risks and then and have them pay off and then get rich quick. And I would say that to me, that's our biggest advantage, is that we have this behavioral advantage where we're actually saying we're going to look longer term than others, try to identify these businesses that have high and sustainable returns. And even though it doesn't mean that you'll get rich tomorrow, by investing in these great businesses with these high and sustainable returns, we think that the probability of getting rich quick is low, but the probability of getting rich slowly in these types of businesses, we think is very high.
I also, it's a great point. I also love the fact that with that mindset, with that kind of strategy or philosophy in mind, it helps from a tax perspective, right? So if you've identified this business that has enduring pricing power, a long runway for growth, that can kind of survive and actually almost thrive in all kinds of different economic scenarios, you never really have to sell and realize gains, and that's a big deal. If you're realizing gains or losses, there's a tax implication to that, and that's a real effect on your overall after-tax return.
Yeah, it really is a huge impact, and you get to compound on the government's money for many years if you don't have to sell it, and it's a huge advantage to our strategy, I think.
Well, super stuff. Thanks, Elliott. We've been talking about investing in ownership-minded management teams, and that's part of the mosaic, right, that we're looking for in these global champions. So like and subscribe, leave a comment or ask a question below, and check out the next video. We'll see you in the next one.